The European Commission slashes economic forecasts for the Eurozone. What is the European Central Bank going to do about it? Welcome to FT Markets. Now, with me to discuss these issues is Ferdinando Giugliano, the Global Economy News Editor of the FT. Ferdy, we had these big downgrades from the European Commission of the Eurozone's growth forecasts on Tuesday. Now, I mean, we've seen lots of downgrades. Was there anything particularly special about these? Are they bigger than the IMF's downgrades? Tell me about them.
Well, let's have a look at the chart which we have. And as we see, it's quite a bleak scenario. These are forecasts for 2015. The red bar is what the European Commission thought would happen in the spring. And in blue, it's what it now thinks will happen.
So it's pretty bad unless you're Ireland, really.
It's very bad unless you're Ireland. And what's really interesting, it's the forecast for Germany, which, as we see, has been downgraded massively. It's basically been halved from 2% to 1.1%. And I think that's the real worry at the moment in Brussels and elsewhere in the Eurozone. So far, Germany's been holding up pretty well in spite of gloominess in other countries like France and Italy. Now, if the European locomotive really starts slowing down, what's going to happen to the rest of the Eurozone?
Now, is this much slower than other people are forecasting, or is this really the European Commission coming into line with everyone else, the private sector forecasts, and the IMF, which downgraded the Eurozone only last month in October?
Well, I think it's now a general consensus that the European Commission is kind of really coming into the general line. And I think it's very, as I said, it's very telling that, well, in a way they are kind of now understanding that the reality will be a lot weaker than they thought. The real question is whether this will change their policy at all, the one of the Commission, the one of national governments, and the one of the European Central Bank, which meets on Thursday.
So we've got, I mean, Germany in lots of ways has got almost full employment, it's got a shrinking population. We wouldn't expect much more than 1% growth. This is quite normal, isn't it, for Germany?
Well, I think it's possible. There are lots of headwinds there, but I think analysts are struggling in a way to understand why there has been this big downgrade. Because if you just go back a few months ago, the situation was looking pretty okay, and there was talk of German companies finally investing again, and maybe even a little bit of extra public spending in infrastructure. But it looks like the Ukrainian crisis has had a very big psychological impact on both consumers and on companies, which are now much more reluctant to spend. So it's not so much a direct hit on exports from Germany to Eastern Europe or Russia, which clearly is there, but it's quite small. It's more an indirect psychological effect.
So it's confidence again. Now, I think we can see, if we look at the growth figures we've seen for the Eurozone as a whole, we can see that in the second quarter, we do see this confidence effect. We see growth which had been, after a long recession, it had been moving up quite healthily, and then suddenly it got cut right back.
And there are fears that Q3, the missing quarter in this chart, could be just as bad. Today we had some really bad retail sales numbers, PMIs, the kind of purchasing managers indices, which show confidence across services and industry, have been quite weak.
So tell me about, we also got obviously the blue line here, which is the annual change in inflation on the right-hand axis there. It's sliding down quite close to zero now. Is this really sort of worrying slide into deflation, or is this actually just a reflection of falling food and commodity prices? In that sense, quite good. It might help growth in some sense. Is this good or bad?
Well, we see that a lot of this is down to volatile energy prices and food prices. And in a way, that's, as you suggest, is very good, because it means European companies, for example, which rely a lot on imported energy, will have to pay less for, say, for oil, for example, or for energy. But I think if you look at core inflation, which is the measure of inflation which strips all these volatile items, well, you see it's been coming down, and it's come down again last month. And this is something which I think will worry the European Central Bank as it meets this week.
Okay, so we've got weakness in the Eurozone as a whole, driven by the core in Germany and the other big economies, and we've got sliding inflation. what do policymakers do? First of all, what does the European Commission do? Very quickly.
Well, it seems that the European Commission has been talking a lot about a big investment fund which it wants to use in order to boost investment in the Eurozone. Jean-Claude Juncker, the incoming president, has been talking about it. There's very little detail at the moment. The main recommendation which seems to come from Brussels is the usual mix of fiscal prudence and structural reforms.
Okay, so all effort, the whole onus for stopping this slide and getting growth back is back to the ECB. What can it do?
Well, it can do, in a way, it can still do a lot. The ECB has not done quantitative easing a la Bank of Japan, a la US Federal Reserve, or a la Bank of England. But really, it's a big political step to do that, because Germany and other conservative countries are very much opposed to it.
But isn't it doing more when it's creating money, it's printing money and buying private sector assets? That's more risky than buying government assets.
Indeed, that's what the ECB would like to say. The problem with those asset purchases is that they're quite small. If we look at the size, the effect they have on the balance sheet will be very small, because there aren't many of these ABSs, which the asset-backed securities, which the ECB wants to buy around. And anyway, if he wants to buy a lot of them, then he will need to buy the riskier parts of these assets, and that could cause more political frictions with the more conservative members on the board.
Okay, Ferdinando, thank you very much. For more coverage of the ECB's actual actions, what they are going to do on Thursday, visit ft.com.